your performance on those. And this is the problem, isn't it? Because what people start doing is, and myself and Kim talked about this 10 years ago when we first started to talk about retail trading, is people start doing what? They filter a filter with a filter followed by another filter, yeah? Remember that conversation, Kim?
Yes, I
So they
do.
filter a stochastic with a MACD, or they filter a MACD with a stochastic. And and whilst it's a step forward, because obviously the logic's correct, it still leaves you with some real troublesome trade opportunities. So let's take a look at the two systems together. So we'll use the super trend and the MACD, the super trend and the RSI crossover narratives. So we can see obviously here, we've got a trend shift here, and we've got our first sell trigger here. So that looks really good, doesn't it? That sell trade there, but it still doesn't make us very much money. Look at that entire trend, right? So we've got that entire trend, and we've got a sell trigger there that doesn't make us very much money because it gets stopped out here. You see it? And you could use the red line as your hard stop, absolutely. And then we get a buy trade here that doesn't give us any triggers. Good, because it didn't go anywhere. And then we get a sell trend here, where we get a sell trigger here, and we potentially got stopped out there, didn't we? Because some people will say, but surely it's the close of a candle. But what if the close of the candle was away up here on a data release? Surely you're not going to let that run a stop to the close of a candle. So that probably got stopped out for a loss. So if you take those two trades together, how much money did you just make? Well, if that was your profit and that was your loss, how much money did you just make on those two trades? You're actually sitting with this current small loss, aren't you? You're actually losing a few ticks on that trade, correct? So we never had a buy trade here. We never had a sell trade here. We never had a buy trade here, but we did have a sell trade here. So you're back making some money again, aren't you? You're back making some money because that trade stayed in place because it never took out the red line. So you're making some cash, guys. But wait a second here. Let's be realistic. You're making some money on a system whereby we're trending and we're using the stochastic to trend. Well, with a massive trend like that size, and you are currently making a profit from 47s to a current price of 37s for 10 points. You're making 10 points on a massive downtrend like this. 10 points. 10 points. What? Now, obviously, there's going to be some great trades. So if you're making a massive profit at 10 points here, we can add that to our profit and loss again, and we can come back in again and say, well, that's what our current profit and loss is there. So obviously from this is our starting point, right? I'm just taking the size and I'm not rescaling the chart, so this is valid. And you can say, well, what about the last trade that we had? What about the last trade we had? Well, we had a sell trade here, which lost money. So there was our sell trade there, which lost money. And we'll just give it a stop right there. So we'll take that off the trade at that stage. And there's the profit and loss again, is now sitting with a very, very small profit. But the trade before that did very, very well. The trade before that actually made some nice money. But where is your exit? Where is your exit? Well, because obviously this buy trade had a possible exit there. So you could say, right, that was my profit. And then, of course, this buy trade here, well, that obviously had an exit here because that was the only trigger we had, was when we broke the structure here. So that profit actually was replaced by that loss there. And when you add those together, it's about a 1 or 2 tick profit on that. So for the entire day from 8 o'clock, you've hardly made any money. And if you go back to 7 o'clock, you're now on a big loss. Take a look. Because there's your sell trigger in a sell market right there. You get it? So there's your exit there. So there's your loss. There's your loss. So when we look at that sell trade there, you can recognize that it never had any triggers. None. And when you look at the next sell trade, if you're going back to 6 o'clock, so that you know we're not cherry picking these, there was your sell trade there, and you get stopped out there, didn't you? Or you could say, well, you took that profit there because it was a profit take, which is true. It's still only a profit of about 5 points. So even in a massive downtrending market like this, where you're starting to be seduced by that one single sale there, seduced by it because it obviously looks like an absolute peach of a ripper trade. And yes, you will get peaches. You will get absolute rippers, absolutely, no doubt about it. You're occasionally going to get a screenshot that I could show you that's going to make you 10 grand on this type of idea. But to get to that 10 grand, you're probably going to have wiped out about 20 grand worth of losses. So there's always these as ideas. You're always going to start filtering filters with more filters, followed by even more filters. But that's because the market doesn't play this way. The market doesn't go down because of a moving average. It goes down because it's expensive. It's overpriced, if you like. That's why a market goes down, not because of a moving average. And a moving average just detects the fact that the market is going down. So what we've got to try and do is be better than that and recognize, well, what does it mean for me as a professional trader? What am I going to do about it? If the market is dropping, I need to be clever enough to make sure I don't get trampled as a buyer, and I need to be clever enough to join in at the right time to take advantage of the fact that the market's falling as early as possible so that I can take part in the move. And this is the difference between what we're trying to accomplish here. We're trying to give you that narrative so that when you know what the market makers are doing, whether they're cycling or whether they're pulling, you know what the market makers are doing. If you know, guess what, Reeve? If you know, right? So if you know what the market makers are doing, you know what the market makers are doing. And you can play along with that storyline. I'm pretty sure Reeve was about to post a picture there, but yeah, he's off the ball now. He's having his lunch maybe. So, but the basic idea, guys, is we've got to be better than that process. We've got to be a mile better than that process. So when we understand that we've got to be so much better, we've got to break that type of storyline. We've got to break that narrative and start thinking more like the market itself. Start actually acting with the market, thinking about what the market is wanting and ultimately will ultimately do in terms of the storylines. And that does mean more activity from us. It means more requirements for us to step forward with an idea, with a trade plan, an idea that the trading is therefore harder than simply a little buy or sell arrow on a chart like this. Yep. Well, if that's the case, guys, that unfortunately is the case. No luck. Got to get on with it. And the sooner we get on with it, the sooner we actually start making some money. Otherwise, all we'll be doing is chasing the next best system, the next best idea, the next best trade storyline, the next best trade narrative. And if you're doing that, then, yeah, well, you're destined to ultimately never get anywhere.